Thank you, Chair David, for the introduction. I have my minister's speech, the Honorable William Duma, Minister for State and Enterprises. He sends his apology. He couldn't make it to this conference, and so I will present his speech, the speech on his behalf, on the theme Opportunities for Growth, Investment and Public-Private Partnership. Prime Minister of Papua New Guinea, Honorable James Marape, fellow ministers and members of Parliament, distinguished guests, executives from the public and private sectors, Kumul Consolidated, Kumul holding companies, chairmen and directors, managing directors of Kumul Petroleum, Kumul Minerals, KCH, and Mineral Resources Development Corporation Managing Director, PNG Corp President Anthony Smare, representatives from the Australian government, ladies and gentlemen. Before I proceed, I want to acknowledge that we gather here today at ICC Sydney, situated at Tumbalong, the land of the Gadigal clan of Eora Nation. In the spirit of reconciliation, and as a demonstration of respect for the traditional laws, customs, cultures, and country of the First Nations of this land. I join ICC Sydney in warmly acknowledging the traditional custodians of the country. I extend respect to elders past, present, and emerging. It is an honor to speak at this important forum hosted by PNG Chamber of Resources and Energy. This gathering reflects our shared commitment to fostering dialogue and collaboration as we chart a clear pathway toward sustainable development and inclusive growth in Papua New Guinea, ensuring that our collective efforts translate in tangible benefits for our people, communities, and the nation's future. As we approach our nation's 50th anniversary, Papua New Guinea stands as a transformative point in its development journey. Our government's economic strategy, underpinned by the leadership of the Marape Rosa government, reflects consistency, discipline, and clear commitment to national priorities, health, education, infrastructure, and empowering provinces and districts to deliver frontline services. A key pillar of our strategy is the reform of state-owned enterprises, which play a critical role in sectors fundamental to our nation's economic growth and service delivery. Since 2019, this reform program has received unwavering support through consistent budgetary allocations, enabling SOEs to address challenges, stabilize operations, and improve performance. Papua New Guinea's economy remains resilient, with real GDP growth of 4.9% in 2024 and a projected growth of 4.7% in 2025. These growth figures are underpinned by stable macroeconomic policies, strategic investments, and key resource projects like the PNG LNG project and the planned Papua LNG expansion. Encouragingly, much of this growth is now being driven by the non-resource sectors, reflecting our broader commitment to diversification and inclusive growth. The current macroeconomic environment presents unique opportunities for investment, particularly as the government's fiscal policies prioritize infrastructure development, energy diversification, and downstream processing initiatives. Prime Minister Marape aptly stated yesterday in his address of progressing PNG from a commodity-based exporter to a secondary product exporter, capitalizing on value-adding along the value chain is more than enough directional statement for SOEs who are responsible for the enabling infrastructure of the PNG economy. These efforts align with our vision of creating a modern and robust economy that benefits all Papua New Guineans, not only through growing the gross domestic product, but also through equitable distribution of generated wealth. Despite their pivotal role, Papua New Guinea's SOEs face substantial challenges. One, aging infrastructure. Many SOEs operate with outdated facilities, leading to inefficiencies and high operational costs. Financial constraints. SOEs are face significant debt burdens and cash flow issues, impacting their ability to deliver services effectively as trading companies. Governance and accountability issues, weak governance frameworks have led to underperformance and inefficiencies. Community service obligations, or CSOs. Many SOEs are required to deliver non-commercial services to remote populations, often without adequate funding, placing further strain on their finances. These challenges highlight the pressing need for targeted reforms and strategic investments to empower SOEs to achieve long-term sustainability and growth. As I said, this is the Minister's view. And my view is that where an SOE has effectively addressed market failures, such as telecommunications, the state should prioritize creating an environment that fosters healthy competition while minimizing its direct involvement. This approach ensures that market dynamics drive innovation and efficiency, ultimately benefiting consumers and the broader community. In cases where an SOE has successfully demonstrated market viability within specific parts of the value chain, such as profitable grids in the power sector, there is an opportunity to introduce contracting models or equity participation. This allows private sector expertise and capital to optimize operations while maintaining cross-subsidization mechanisms to support community service obligations. Notable examples include the POM grid, Ramu grid, and Gazelle grid, where such modalities can ensure continued service delivery and financial stability. This balanced approach enables SOEs to focus on their core mandates while leveraging private sector partnerships to enhance efficiency and profitability. Though our SOEs are faced with challenges, as mentioned earlier, I must acknowledge the continued support from the Marape government. And before I go any further in my speech, I now take this opportunity to sincerely thank and congratulate the Honourable Prime Minister of Papua New Guinea, Mr. James Marape, and Treasurer, Honourable Ling Staki, for their leadership in successfully passing the 2025 national budget. The state-owned enterprise reform, a flagship initiative of the Marape government, has received unwavering support through consistent funding from the national budget. Between 2019 and 2025, SOEs have benefited from allocations amounting to 7 to 12% of the total public investment program funding. This sustained support reflects the government's recognition of the critical role SOEs play in driving economic growth and improving service delivery. In the 2024 budget, the capital investment budget was 10.6 billion, representing 39.8% of the total 27.4 billion national budget. Of this, about $1 billion, or 10% of the capital investment budget, which also include donor support, was allocated to KCH and the SOEs. For 2025, the capital investment budget for KCH and SOEs totals about 747.75 million, equivalent to 7% of the capital investment budget of 10.3 billion. These allocations have been pivotal in supporting the modernization and upgrading of critical infrastructure across key sectors, including power, water and sanitation, telecommunications, air transport, sea transport, banking and financial services, and commercial agriculture. The Marape government has undertaken significant reforms to create an enabling environment for SOEs to improve performance. And these initiatives include legislative and policy enablers, the adoption of independent SOE, CEO, and director appointment process from 2020 onwards, emphasizing skills-based appointments, amendments to the KCH Act in 2021 to strengthen governance and transparency. On community service obligations, a new CSO framework was incorporated to the amendments to the Kumul Consolidated Act in 2021, with implementation beginning in 2022. This framework aims to address the historical challenges of SOEs providing services on non-commercial terms. CSOs often involve delivering essential services to remote populations, offering reduce rates to specific customer groups. While these services are crucial for national development, they have historically been unfunded, placing financial strain on SOEs. Negotiations are underway to have CSO costs to be funded as service delivery by the state. Debt restructure. Any restructure of SOEs is not complete without crystallizing debt and finding treatment. We have enough lessons from the BSP privatization in 2002, where debt was transferred out and sale assets revalued for the market. We also have recent lessons from the telecom parcel privatization initiative, which is continuing, but with a view to going out to a more broader market. Enhance accountability. Reforms have streamlined performance monitoring and improved the alignment of SOE objectives with national development goals. I am pleased to announce that of all the 10 SOEs that come under Kumul Consolidated Holdings, only 3 remain in the disclaimer audit category. Restructure and commercialization. The government is restructuring SOEs to improve efficiency and financial sustainability. Cases in point include Telecom Limited has undergone significant transformation, including amalgamation with B-Mobile in 2021. The value of B-Mobile in 2021 was 0 and was amalgamated with Telecom. Consolidating functions and streamlining operations. Implementation of a turnaround strategy focusing on resizing operations, partial privatization, and stabilizing debt facilities. Progressing negotiations for partial privatization to bring in private capital and expertise with opportunities for public-private partnership in line with NEC Decision 410/2021. Water PNG Limited. The amalgamation of Edaranu and Water PNG in 2020 created a unified entity to manage water supply and sanitation services. Key initiatives include reducing duplication and overhead costs, addressing unprofitable operations in 18 of the 23 centers, with annual CSO costs of 45 million, impacting profitability. Exploring build, own, operate, transfer models for new water treatment plants in Port Moresby, Lae, and Mount Agan through private-public partnerships. PNG Power. The PPL rescue program approved in 2022, KCH aims to stabilize and recover PPL through organizational restructure, expenditure control, and revenue improvement. Transitioning mini-grids to renewable energy with partners, tariff reviews, grid rehabilitation projects. We now have mini-grids working committee with development partners, developing an options paper to improve operational efficiency, pricing and cash flow strategies to improve financial position. On the 16th of March 2022, NEC approved the PPL rescue program, and we're continuing that with government funding. The immediate focus for KCH in this recovery program is to position PPL to achieve grid stability through a targeted capital expenditure program, improve billing, revenue collection, operational efficiency, and cost control initiatives. The recovery program further entails looking at restructuring of PPL's unfavorable cost structure and stabilizing its balance sheet for the longer term. We are now working on an options paper to bring back grid stability for new investments to improve PPL's operational efficiency, financial position, and cash flow, improve cash flow. The options paper is actually focusing on transitioning PPL mini-grids from diesel generation to renewables with partners, outsourcing specific functions, operations, and grid management, cash flow improvement, debt restructure, and grid rehabilitation. On New Guinea, the refleeting strategy under SOE reform program focuses on delivering cost-efficient refleeting strategies. And I'd like to say that New Guinea is looking forward to receive 83 A220s in September 2025 for a total of 11 fleets over the next 3 years. It is also expecting to receive 2 Boeing 787s in July and October 2027. On the People's Microbank commercialization, the commercialization of PMBL into the NBC, National Banking Corporation, established PNG's newest full-service commercial bank with the objectives of offering forex transactions and reducing banking fees through increased competition expanding access to banking services for the unbanked population, and exploring opportunities for an IPO on the ASX and PNGX. Investment opportunities exist. One of the most transformative projects currently underway is the redevelopment of the Port Moresby waterfront. Known as Portside Gardens, this project will rejuvenate the city's landscape, creating vibrant business and leisure precinct. As well as in terms of notable achievements in 2025, at this juncture, I would like to take this opportunity to commend the two Kumul entities, Kumul Minerals Limited and Kumul Petroleum, and their respective boards and management for following success and achievements. On Kumul Minerals has recently paid 100 million in dividends to the state, reflecting our commitment to delivering returns while investing in our nation's future. On Kumul Petroleum, KPHL has recently increased its equity interest in PNG LNG project to 19.4% through a strategic purchase from Santos. This move enhances our financial returns and strengthens our involvement in management decisions. Those are but a few successes of the two Kumul holding companies. I'd like to acknowledge the contribution of all the development partners who have contributed more to SOEs as well, along with the government of Papua New Guinea. And in conclusion, PNG stands at the crossroads of unprecedented opportunities. And these opportunities avail themselves for a partnership between government and private sector. So KCH is positioning itself to operationalize and work closely with the PP Act, through the PPP Act, and work closely with private sectors to take advantage of the opportunities that are available. Thank you, and have a blessed Christmas.